Has it taken a bit of a hit, investor sentiment, because of the volatility that we've seen, Caleb?
Good morning, Dom. And it's really the trust that took a hit. The volatility, the ferocity of the day trading and the backlash between traders and institutions over the last week has really hit our readers and in their trust factor. So about 42% say they trust the stock market less than they did 6 months ago, just because of the wild swings and all the action of the past week. In terms of their sentiment, though, they're still bullish. They still think that equities, especially large cap equities, are the way to go. We've been surveying them since last February, before the pandemic was actually official. They've remained bullish, pulled back a little bit. They're still there, but this has really done a number on trust, Dom.
So if it's really done a number on trust, what do you anticipate will be the ramifications? Does this bring more investors into the fold that weren't there before? Does it then take investors that were at the fringes and push them out because they've lost something in terms of the volatility? What exactly is the overall health of the business, given what we've seen?
Well, we've seen the online brokers bring on millions of customers in the last year without question, some of them more than others. But I think folks, especially who are new to trading and new to investing, thought that you just put some money in and everything went up. And that has been true, really, for the last couple of years. The last couple of weeks, though, has been all over the place with some of the hotly day traded short stocks. I think some folks came into the market, made some early trades, probably lost a little bit of money, and that's going to knock some people out. But we see this at every cycle when we have a lot of trading mania and a lot of new people coming into the market. I think you'll get a balance of folks who are in, which is very good, but without that education to actually know what they're doing, they run the chance of losing money. That said, most of our readers, and these are active investors of all ages, are still bullish. They're still bullish on big tech, and a lot of them, 25% of them, actually day traded some of these stocks. So I think the net, Dom, is that you'll see more people actively involved in the markets, and that's a new dynamic for both institutional investors and retail investors to consider.
So one of the things that we've also seen a lot of controversy and heat around in this discussion around short squeeze volatility is whether or not brokers should be responsible for some of the volatility trading rules that have been put into place. I hearken specifically to Robinhood halting trading or severely restricting some of them in terms of those short traded stocks and the options around them. Is there something out there that tells us that those broker rules are in focus for many of these traders, knowing that they are in positions and maybe can't get out as easily or into them as easily?
Absolutely, and I'm glad you asked that. I think part of the trust factor was not just the stock market might be rigged, as some people say, but some people were very disappointed with their online platform. 63% of our readers said they don't want their broker to tell them when they can and can't trade or what they can and can't trade. So they don't like those rules. They don't like to be limited when the market gets very volatile, because as we know, some people couldn't get out of trades. So their disappointment and the lack of trust really extends from markets to platforms, and platforms have a lot of work to do to bring investors and traders back into the trust tent, so to speak. But that said, a lot of them came in the last year, and I think brokers are listening now to what these folks are saying, and you'll see some adjustments and you'll see some movement within that industry. But they've been in focus a lot by our readers who are active investors. They use these platforms and tools every single day.
Now, before we let you go, one of the other things also with regard to the brokerage side of the controversy is this notion that the brokerages did what they did for self-preservation. Do you think that a lot of your readers and survey takers understand that a lot of what happened was because they couldn't make good possibly on some financial obligations, and that's why those trading restrictions went into play?
Yeah, I think we have some very sophisticated readers and traders who visit our site who know that. I think a lot of other people don't even read the terms of agreement, don't even know that that's kind of how the brokers work, and they were doing that for their own businesses and maybe even to protect their customers. I don't think they really paid too much attention to that. I think it was the black and white of, oh my gosh, my stock that I bought is losing money and I can't get out of my trade, or it's going up and I can't get in. That's frustrating for people, especially new to the market, that don't understand the rules. So it's a learning curve for both retail traders who are new and also the brokers and the platforms that are bringing all these people on. This is a new relationship, but it's also, Dom, going to be the new dynamic going forward, because millions of people have come into the market, and that's probably a good thing.
Shepard Smith here. Thanks for watching CNBC on YouTube.